Hi and welcome to the Martin Bell Show. Hopefully you've been keeping well, and in the video today we're going to be reading from the Daily Mail Online, and we're going to be talking about 10 tips for buy-to-let, the essential advice for property investors. So I currently do not own any real estate yet for myself, but I am looking to add into that position and eventually to get into physical real estate. I do own some REITs. It's mainly with iShares because they mainly do the REITs at the moment from what I've seen. It's in the developed market REIT. And before I go any further, this video does not constitute as financial advice. This is just me documenting my journey for educational, inspirational or motivational purposes only. So I would love to be able to get some physical residential properties, and I would also want to have some commercial properties, because commercial properties can go into a SIP or SSAS, a SAS. So then both of them have different benefits and for different things. And with a SIP, it's a very individual. With a SAS, SSAS, it's you can have up to, I think, still 11 people involved. So it's also a good thing if you want to have close family members or business colleagues or business partners. Buy-to-let lost some of its spark in recent years, but that might be about to change as new tax cuts and low mortgage rates have caused landlords to flock back to the market. Landlords suffered a triple whammy hit this year as the popular tax reliefs were axed or scaled back in April. But the Chancellor's recent stamp duty cut, coupled with access to cheap loans, have led to spike in investors looking to buy homes. If you are tempted to, make sure you read our 10 tips to buy-to-let guide, which is regularly updated and helped millions of landlords for more than a decade. Okay, so let's read your 10 tips, shall we? So I am currently saving money aside so that I can actually get into some physical real estate, as well as I'm also continuing to squirrel away as much money as possible into my retirement funds and into my ISAs. So I recently had a payment the other day today actually, from my SIP provider. They paid in, I think it was around over £100 I got for a top up from my SIP. So that's really good. So now I have roughly around £300 in cash ready to be invested. I think I have roughly around £3,100 invested. So I've just got to get several hundred more pounds in, and then I'll be able to invest, because I like to invest in lumps of 500 or slightly more, because you have to pay a commission with Hargreaves Lansdown. I was with Trading 212, but obviously they're a commission-free trading platform, as well as I don't currently see it like as long-term viability. As they get more funds under management, I don't know how they'll be able to keep it free. And I'm really happy with the service they provide with Hargreaves Lansdown. The reports that they provide, their contract notes are so much better, and there's someone you can call and speak to, and there's loads of other great services that they provide. So it says here, a world of low interest, right, previously a 3% stamp duty surcharge would eat a large amount of your money, while the loss of a full mortgage interest tax relief now makes returns more muted than once were. But the government's recent stamp duty cut has softened this blow. Earlier this year, This Market Money revealed that hundreds of thousands of landlords have left the market in recent years as a result of tax changes of recent years. And before the pandemic hit, a third private landlord said that they were looking to sell at least one property over the next year. So they're looking to cut back. However, while they will still have to pay the 3% surcharge, landlords now will see their stamp duty be significantly reduced when purchasing new property thanks to the Chancellor's measures. So this is another reason why I am looking forward to also going into commercial real estate. It is because the tenant agreements are much longer, and you're having to constantly replace tenants, not the churn, as well as you can have longer term leases, as well as they can pay to fix damages that are done to the property whilst they're leasing the building, which is really good. So while many home buyers, particularly in the southeast and London, will undoubtedly benefit, the average landlord's purchase will also be big savings. For example, as illustrated in this chart below, a 400,000 second home will now only carry a stamp duty bill of £12,000 rather than £22,000. So that's a saving of £10,000. So let's click on. So here, this is from AJ Bell. So this is a property value. So the average house price is £250. So the old stamp duty was £2,500. New stamp duty is now £0. So that's really good. So while there is still £12,000 more than a standard house, purchases due to the 3% surcharge, the landlord will still now have saved £10,000, the same as a standard home buyer would by not paying any tax at all. As an income investment for those with enough money to raise a big deposit to buy to let attractive, especially compared to low savings rates and stock market swings, mortgages rates at a record lows and helping buy to let investors make deals stack up. But be aware, low rates one day they must raise, and you need to know that your investment can stand that test. Greater demand from tenants' rents that should rise with inflation, and the long horizon for interest rates mean that many investors are still tempted to buy to let. If you are planning on investing or want to know more, we will tell you 10 essential things to consider for a successful buy to let investment below. So let's get to it, shall we? So say number one, research the market on the buy to let, and I have to say that's very important to do, is to do your due diligence on all before making any decision and pulling the trigger and purchasing or taking out on a mortgage and buying a property. You need to know the numbers, and if it's cash flowable, as well as other things like, is the area doing okay, is it going down in like where you want to be, or is it getting more unsafe, or is the area up and coming and becoming more safer and more employment options in the area. So this is here. It says, if you're new to buy to let, what do you know about the market? Do you know that the risks as well as the benefits? Make sure buy to let is the investment you want. Your money might be able to perform better elsewhere. And this is the reason why I'm mainly into stocks at this moment in time, as it's very liquid, as well as I at the moment can't afford to put large sums of money down. So I can keep topping my SIP up, and once I hit my £500 threshold, I then invest. So it says here, in recent years a high rate savings account would beat most investments. And I do remember that when I was at one time getting 5% on my cash savings account. Now rates are lower, but investing in buy-to-let means tying up capital in a property that may fall in value, especially in times of economic uncertainty. This compares to the possibility of a 5% annual return from an income-based investment fund or 3% on a fixed-rate savings account. That would probably have to be like a 5-year, probably to get 3%, and I wouldn't want my money tied up for that long period of time. Historically, the stock market has outperformed that. Doesn't mean it will in the future, but in the long term, it probably might. Remember that the return from your investment in funds, shares, or an investment trust through an ISA will see you escape tax or income and get capital growth tax-free, and you also have the ability to sell up quickly if you want. The flip side is that you cannot buy an unloved investment fund and set about renovating it and adding value yourself. Investing in buy-to-let involves committing tens or thousands of pounds to a property and typically taking out a mortgage. When house prices rise, this means it is possible to make big leveraged gains above your mortgage debt, but when they fall, your deposit gets hit and the mortgage stays the same. Property investing has paid off handsomely for people, both in terms of income and capital gains, and is essentially that you go into it with your eyes wide open, acknowledging the potential advantages and the disadvantages. If you know someone who has invested in a buy-to-let property, before asking them their experiences, warts and all, the more knowledge you have and the more research you do, the better chance of investing pay off. Number 2. Where people would like to live, and this can be a variety of reasons. Where in your town has a special appeal? If you're in the commuter belt, where has the good transport? Where are the good schools for young families? Where do students want to live? So it says here, this is like a heat map on areas. What are the buy-to-let hotspots? As you can probably guess, like the southeast is quite negative because it's a very expensive area to live. So if I was going to buy and renovate and flip a property, it'd probably be more Midlands, and I'd probably have to stay down there for some time and then get it done and then sell it on. So you need to match the kind of property you can afford and want to buy with locations that people would want to live in those homes would choose. These questions might sound overly simplistic, but they are probably the most important aspect of a successful buy-to-let investment. In most cases, people tend to invest in a property that's close to where they live. On the plus side, they are likely to know the market better elsewhere than they can spot the kind of property and the location that they will do well. They also have a much better chance of keeping tabs on the property. It is also worth bearing in mind that you are a homeowner and you're already exposed to property where you live, and looking for a different type of home in a different area might be a good move. And that is very true. As I am probably looking buy-to-let mortgage calculator. Mortgage amount, let's say I have 250, 2,500, 25,000, 250. Let's say I get 3% interest rate. Duration 25-year mortgage, not interest only. Repayment, calculate. So monthly repayment is £1,100 a month. So as you can see, this is another reason why I'm not in property at this moment in time, but that is something I would want to do, and this is very important to sort your life out. Very, very important to sort your life out. This is beyond the scope of this video, but I will be making another video talking about ways of sorting your life out if you're struggling in certain areas. So it says here, do the math on buy-to-let. Before you think about looking around properties, sit down with a pen and paper and write down the cost of houses you are looking at and the rent you are likely to get. Buy-to-let lenders typically want to rent to cover 125% of the mortgage repayments, often now 150%, and most now depend on 25% deposits, or even larger for rates considerably above residential mortgage deals. So for every 100 grand you put in, you're going to need 25 grand. So if you need 200 grand, that means you're going to need 50 grand deposit just for the deposit. That doesn't include the closing fees and then all the other fees, as well as you've got the renovation costs, as well as and then you got to then start paying the mortgage down. So the best rate buy-to-let mortgage also come with large arrangement fees. Once you have the mortgage rate and likely rent sorted, then you must be clearly clinical in deciding whether your investment work out. Don't forget 2 factors in maintenance cost. What will happen if the property sits empty for a month or 2? There are things to consider. Make sure you know how much the mortgage repayments will be, and if it's a tracker, allow for rates to rise. So it says here, number 4, shop around to get the best buy-to-let mortgage. Do not just walk into your bank and builder society and ask for a mortgage. It sounds obvious, but people who do this when they need a financial product are one of the reasons why banks make billions in profit. And this is why you should shop around, because if someone says this price and someone else says this price, then you can go to that cheaper one if it offers the same, but then you can go to a third person who's like, can you get it cheaper still? And then just keep shopping. Keep shopping till you can get the best deal that suits your needs. And then eventually, as you build up some more properties, you get a rough idea who's going to give you the best deal, and if you keep going to them, they may offer you a preferable deal. It pays to speak to a good independent broker when looking for a buy-to-let mortgage. They can not only talk to you through what deals are available, they can also help you weigh up which one is right for you and whether to fix or track. You should still do your own research so that you can go into the conversation armed with knowledge on what sort of mortgages you should be offered. Think about your target tenant. And this is another thing. The person who's going to be in your property, you need to make sure that they are able to afford to be able to live in this property, as well as are they going to look after your property, or hopefully they're not vindictive and they damage your property to be malevolent because they're envious of someone else in doing really well. So it says here, instead of imagining whether you would like to live in your investment property, put yourself in the shoes of your target tenant. Who are they and what do they want? If they are students, it needs to be easy to clean and comfortable but not luxurious. And that's another thing. Students don't really want luxurious accommodation. They want something cheap and comfortable and easy to clean, as they're probably not the tidiest of people, probably stereotyping there, but it's probably the case. If they are young professionals, it should be modern and stylish but not overbearing. If it's a family, they will have plenty of own belongings and need a blank canvas. Remember that allowing tenants to make their mark on a property, such as by decorating or adding pictures or you taking out unwanted furniture, makes it feel more like a home. These tenants will stay for longer, which is great news for a landlord. It is also possible to take out an insurance policy against your tenant failing to pay the rent, usually known as a rent guarantee insurance. This can cost as little as £50 and is available as a standalone project from a specialist provider or as part of a wider landlord insurance policy. Don't be greedy. Go for rental yield and remember the costs. So it says here, we all have read the stories about buy-to-let millionaires and their huge portfolios, and personally I have nothing wrong with buy-to-let millionaires, and if they want to become 10 millionaires, 100 millionaires, that's really, really good. As long as they're doing it in a morally and ethically and legal way, then I don't have a problem with that. But while you may expect long-term house prices rises, experts say invest for income, not short-term capital growth, and that's what I'm mainly investing in. Most of my stocks are more income with some moderate growth, but they're mainly income-based my investments, because I want the income because it's a retirement portfolio. I'd rather have the income than an accumulation fund where I have to sell out of it to get my money out of it. I'd rather have it dripping me money every month or every quarter or biannually, but I don't really like the biannual ones. I'd rather prefer a quarterly or monthly if I can. So to compare different property values, use their yield. This is an annual rent received as a percentage of the purchased price. For example, a property delivering £10,000 worth of rent that costs £200,000 has a 5% yield. So let's have this. So let's say property value to 50. 250. Monthly rent is, let's say, 800. Calculate. So that's a 3.4% yield. Cool. That's just me just typing some random numbers and it isn't based on anything. It's just seeing what it would come up with. So rent should be the key return for buy-to-let. Most buy-to-let mortgages are done on an interest. Most buy-to-let mortgages are done on an interest-only basis. So the amount borrowed will not be paid off over time. And to me, that's something I don't want to be. I'd rather be paying down the debt and actually having ownership of the actual property and not just have that debt and then having money coming in. Otherwise you're just accruing a lot of debt. And then as you pay more debt down, your yield goes up because you have loads of, obviously you have a lot higher ownership of the property, which means that your monthly costs, repayments eventually go down as well because you're owning more of the property, and that way you get more to keep more of the cash flow from the property. But it is not, that's more of a long-term play and not a short-term play. So if you can get a return substantially over the mortgage payments, then once you've built up a good emergency fund, you can start saving or investing any extra cash. Remember though, people rarely buy a home outright and they come with running costs. So mortgages, costs, maintenance, agent fees must be worked out and they will eat into your return. You may want to consider whether buy-to-let still beats an investment fund or trust once these costs are taken into account. Once mortgages, costs and tax are considered, you will want the rent to build up over the time and then potentially be able to use it as a deposit for further investments. And that's what you want your snowball to do, so you can get one, so eventually you'll be able to get more properties, buying more properties. So this means you'll have the benefit from the income from rent paid off with the mortgage and hold the property at full capital value. So it says here how to work the return on your buy-to-let investment. So for a £100,000 property that could rent for £500 a month, you would need a £25,000 deposit and roughly £2,000 in buying costs. So that means you need 27 grand. So the mortgage is 75,000 at a 5% interest rate, which is £312 a month, and £500 rental income times 12, which is £6,000, and the difference is £2,250, and deposit plus buying cost equals £27,000 annual return, which is a return rate of 8.3%. So don't forget to maintain costs. So that's pretty good, but that will your yield on cost will get better over longer periods of time as you pay off more of the mortgage. So it says here, look further afield or doing up a property up. Most buy-to-let investors look for properties near where they live, but your town may not be the best investment. And I'm thinking that's probably true for my area as well, because it's quite pricey in the areas that we live in. And I'd have to save up, and that's probably why I'm going to probably move out to more of my town if I do get a property to buy to flip or buy to let. The advantage of a property close by is able to keep an eye on it, but if you will be employing an agent anyway, they should do that for you. Cast your net wider and look at towns with good community links that are popular with families or have sizable university. It is also worth looking at properties that need improvement as a way of boosting the value of your investment. Tired properties or those in need of renovation can be negotiated hard and to get a better price than spruced up to add value. This is one way that it's still possible to see a solid swift return on your capital investment. If you can add some value to a home straight away, then it gives you a greater margin of safety on your investment. However, remember to ensure the price is low enough to cover your refurbishment and some profit to allow you for inevitable overrun on costs. A good rule to follow is the property developer's rough calculation. whereby you want the final value of a refurbished property to be at least the purchase price plus cost of work plus 20%. Okay. So number 8, haggle over the price when investing in a property. A buy-to-let investor, you have the same advantage as the first-time buyer when it comes to negotiation, a discount. If you are not reliant on selling a property to buy another, then you are not part of a chain and represent less of a risk of a sale falling through. This can be a major asset when negotiating a discount. Make low offers and do not get talked into overpaying. And this is very fair. If you are a cash buyer, you feel like you can pay cold hard cash. If you're able to, that gives you great leverage to you won't get the full price that you want, but if you want to get cash this day, it gives people more incentive to take that and hence to wait. An existing landlord who has owned a property for a long time is cashing in their capital gains and may be willing to accept a lower for a quick sale than a family that needs the best possible price in order to afford a move. Know the pitfalls of a buy-to-let. Before you make an investment, you should always investigate the negative aspects as well as the positive. House prices are on the up right now, but growth has slowed. They could fall again. If property prices dip, you are able to continue holding your investment. Meanwhile, rates are low at the moment. This is encouraging people to invest with rent comfortable covering the mortgage. But what will you do when the rates rise? Considering the standard variable rate, you may move to after a fixed rate period. What will happen if you can't remortgage? Even the popular areas properties can sit empty. One rule of thumb many buy-to-let investors apply to the fact in the property sitting empty for 2 months of the year. This gives us a substantial buffer. Homes often need repairing and things can go wrong. If you do not have enough in the bank to cover them in major repair to your property, such as a new boiler, do not invest yet. Very, very important. Consider how hands-on of a landlord you want to be. Buying a property is only the first step. You will want to rent it out yourself or to get an agent to do it. So I would probably want to initially do it partly myself, and then eventually I would want an agent to do it for me because I value my time, and that way I can do other things and make more money and get that snowball rolling more. Agents will charge you a management fee, but will deal with any problems and have a good network of plumbers, electricians and other workers if things go wrong. You can make more money by renting the property out by yourself, but be prepared to give up weekends, evenings on viewings, advertising and repairs. So this can cost you valuable of time, and is it really worth not getting the management people to do it for you? And as if it's further afield, that can lead to further problems if you have to go to the property. Select a short list of agents from big to small and ask them what they can offer for you. If you're considering going it alone, look at where you will advertise your property and where you will get documents such as tenancy agreement from. If it really pays to look after your tenants, do this and they will look after you. The biggest drag on many buy-to-let landlords' investment returns is the void period, a time when you don't have anyone in the property. Good tenants who want to stay help avoid this, and if you move on, they may even recommend your property to someone they know. Keep up with maintenance, make sure your property is a nice place to live, and try to build a good personal relationship with your tenants. So this is a really good article to get people thinking about investing in property. I won't read the comment section. I'm thinking from now on I probably won't be reading the comment section box below because they can be pretty negative Nancy. So I'm thinking I'm going to end the video here. So if you found this video interesting or thoughtful, then please feel free to subscribe to this YouTube channel and clicking the bell notification button gets you notified when I next release a video. And hopefully you have a great day, and if you comment, I'll get back to you as soon as possible. Take care for now, guys. Bye bye, and I'll see you all soon.